So what's up, guys? Every year, you guys know that we like to trend the real estate market, right? And this is the first time I've actually had Crystal on the video. Normally, it's me telling you guys what I think, and I'm going to go back to what my predictions were last year, real quick. I got them written down. So I said interest rates would be in the mid sixes. Was I right?
Right?
Right. I said that housing prices would stall or pull back a smidge depending on where you were in the DMV. Was I right?
You were almost right.
And I said that the biggest factor was going to be what happened politically in the DMV. And I was absolutely right about that.
Yeah, you definitely hit the nail on the head with that one. Look, and that's still impacting us to this day. So
Right.
you were definitely right there.
So what questions do you want to ask me about the housing market this year?
Well, I got a list right here, so I got you covered. Well, Alan, as you think about 2026 and just thinking about what we're leaving behind here in 2025, and as we start looking ahead to 2026, what is your prediction as relates to what interest rates will likely do?
Well, that's the wild card, guys. So, as you know, you may not know, but the Fed chair recycles out in mid-year, and it just really depends on what and who and how that process goes, right? So, my gut is that rates are not going to pull back as much as people want them to pull back, which is in the threes and fours. I think that, at the end of the year, we'll have a rate that has somewhere in the high fives, right? Maybe 5.75%. But keep in mind, those people that are waiting to purchase, a majority of the people who actually get low rates refinance into low rates. So don't wait for interest rates to pull back to where your comfort zone is, right? Obviously, you got to be able to afford it, but refinance into that rate. Go find the house now. And if rates happen to come back, you got a bonus, right?
Yeah, no, absolutely. And I think that, when we start thinking about rates in the future, I think it all has a lot of dependency on how we do with inflation, right? Has a lot to do with how we are structuring the government and the opportunities in the job market. So there's just so many factors that play into it. But I definitely think that, based on the trend and what we've been seeing over this past year, we started at rates in the sevens. We're down almost a full point at this point in the year. So if the trend line stays the same, we should definitely be heading towards five.
Yep. So guys, I still think it's going to be high fives.
Yeah.
Right. So I don't think we're going to get below 5.5%. I think anywhere in the high fives is very healthy, right? It's enough for investors to feel invested in the market. And it's also something for buyers who kind of have been waiting on the fence, or people who need to refinance out of higher rates over the past 3 to 4 years. They can get this up a little bit lower.
Yeah. Well, speaking of rates and the reason why, if people can afford it, they should go ahead and move forward with making the purchase decision versus waiting to see if rates want to go low. What do you think is going to happen with home values in 2026?
I wrote down every area is going to react differently, right? So I think that there's some areas in the DMV where you're going to see a 2 to 3% jump. And I also think some areas in the DMV where you're going to see a 5 to 10% decrease. Typically, everything moved at the same rate in the DMV. But when things change, and what a lot of real estate agents who've never been through a changing market haven't experienced, is that when markets pull back, they pull back differently than the way the markets push up, right? So everything pushes up when things are going up. But when things go down, it could be this going down by this much, 10%. This could be flat at plus 1%. This could be going up by 2%. This could be at 5%. So I think that it's going to be really depending on what type of asset class you have, how far are you outside of the city center? Are you in DC, right? DC went down this year, right? Because inventory went way up. But Arlington over the bridge might have gone up depending on what asset class you own, or it would have remained flat. So it's going to be all over the place next year.
No, I understand that, especially going to be dependent upon, tertiary market versus the asset class. I know that, Fannie Mae just recently put out some data saying that they would see an increase of about 2 to 3% in the next year. But of course, that is based upon an average, right? So we know that, to your point, there's going to be some asset classes that go up, some that go down, some that stay stable. We just got to wait and see.
Yep.
Yeah.
Yep. It's going to be a very, very interesting housing market, not just in 2026, but years beyond.
Better get prepared. Let me ask you this.
Yep.
Okay. You know, in every market that's changing, I think change sometimes evokes fear, right? People are not sure what they should do and they kind of just pause and they hover. But in every market, there's also opportunity.
Right.
What opportunities do you see for sellers in the upcoming market?
Yeah, I think the sellers that have prepared themselves well, the sellers that have done the repairs on their homes, the
Mhm.
ones that have done the timely updates, that didn't just rush until the end to do those things, are the ones that are going to win,
Yeah.
right? I think that the sellers who are realistic, who understand that we're not at 2023 or 2024 pricing anymore, that we pull back, that get it to the right number and have done the right work, are going to be able to get most of their equity out. They won't be able to get 100% of the equity out, but they'll be able to get out 95% or 92% or a really, really good number, right?
Mhm.
I think that the sellers that are going to be hurting are the bad sellers, right? The ones who don't price right, who are trying to reach a number instead of reacting and understanding the numbers, the ones that are waiting out for more money, not understanding that waiting out could oftentimes mean less money. The sellers that don't listen to a real estate expert that has been through a down market or a changing market, and the sellers who have not invested anything in their home and aren't willing and don't have the money to, right?
Yeah.
Those are the sellers that they're going to get double whammy. Not only are they going to get less, but it's going to take them more time and they're not going to be able to take advantage of opportunities that pop up.
Yeah. Yeah. No, I think that's really good. And what would you say the opportunities are for buyers in this market?
Yeah, if I was a buyer, so when I purchased my first home, I bought it. It was a fixer upper,
Mhm.
right? And it was sat for a while, so I was able to get it for less, and there was less competition.
Yeah.
I think that buyers out there who are willing to buy something that needs some sweat equity are going to win,
Yeah.
right? Because you're positioning yourself for the next run up, right? That
Mhm.
home that you buy now, you're going to be looking to either rent or sell 5 to 7 years out.
Yeah.
I think the move up and the move down buyers. So a lot of those people weren't able to buy a home without a contingency.
Mhm.
We got a home in our neighborhood that is being purchased with a contingency. If I said that 2 years ago, never would have happened,
Yeah.
right? In fact, you couldn't even do that with the builder,
Nope.
right? And that was literally a couple of
Months
months
ago.
ago,
Mhm.
right? So I think the sellers who want to move, who have good equity, who are willing to not push to get 100% of what they think, but they're like, okay, cool, I understand. I'm going to get 92% of what I thought I was going to get, but I know that I'm going to end up making it up on the home that I'm purchasing.
Yeah.
And this home's going to I'm going to be in it for the long run,
Yeah.
right? Those are the sellers. I think those with equity to play with, right? So those
Mhm.
people who listen to us and got home equity lines of credit,
Mhm.
there's going to be some good investment opportunities out there. Stay tuned. If you have equity, reach out to us. We're seeing some good opportunities, especially for our VIP clients.
Yeah.
But those I think are the buyers, the people who are open to assumptions,
Mhm.
right? People who've got money to be able to fill in the gaps, got money to be able to fix up things. This is a good opportunity for you guys.
Okay. Yeah, you slightly mentioned about investors. Like what opportunities do you see out there for investor clients?
So we've been talking about it for a while. Liquidity wins,
Yeah.
right? So investors with cash, investors with vision,
Mhm.
investors who are looking for the 10-year play, not just the cash flow play, but the tax play,
Yeah.
right? So we've been talking to a couple of our clients who have over the past 10 to 15 years, they bought the right house, but their incomes have increased.
Yeah.
So they have no write-offs. Right. So now they're starting to look at real estate differently. Like, okay, this is going to be a 20-year play. I may not get the cash flow, but I'm going to get the tax benefits that's going to save me more than me not purchasing this property. So case in point, like there's a client who's thinking about purchasing a property. They're going to do a cost segregation study. They're going to end up getting like a $50,000 savings, right? Well, they're not going to cash flow on the house that they're going to buy. But if you look at the 50,000 over 12 months or over 60 months, that's cash flow,
Yeah.
right? So
Yeah.
it's just those people who can understand that this is more than just one thing when it comes to investing in real estate.
Yeah. No, those are all really good points. So stay tuned. You've heard his forecast for 2026. We're going to make sure you come back at the end of the year so we can validate whether or not he was accurate. So you can go ahead and save this video, bookmark it. We're going to come back about this time next year and we'll test to see how accurate Alan Johnson was.
Right. Here's the disclaimer. This is just Alan, what Alan Johnson thinks. Right. This comes from 25 years of selling real estate. But I am not the oracle.
No.
Right. I do study trends. Right. I do use real estate common sense. I do talk from experience of me actually and us owning real estate and being through trends. But I will tell you that your real estate advice should come from someone who's been there.
Yeah.
Right. I think the number was 50% of the people that are helping people buy and sell homes have never been in a down market.
Yeah.
That's dangerous. Right. That's just like a doctor who's never been experienced at surgery. Right. Or your portfolio or stock advisor who's never helped or advised anyone and the market's never been a bear market, right? Or a bull market, right?
Yeah.
You have to make sure that you are talking to someone that's been down the road that you've been, even if it's not what you want to hear.
Yeah. Yeah. All right. Well, you got a disclaimer out there, but I'm so So come back and join us. This is Crystal with the AJ team.
You have the dream.
We have the address.
See you soon.
See you soon.